Hello everyone, I am Avadhoot. Here in this session, we are going to consider death of partner. We have already considered admission of partner, retirement of partner, as well as the dissolution of partnership form. And now we are going to consider here the death of partner. Again, here, what is our agenda? What we are going to consider here in this session that we'll have to see. We are going to consider here first introduction, then we'll have to write the ratios, treatment of goodwill, and preparation of account. Now, first part is introduction. A partner will cease to be a partner on his death, and hence death is considered as compulsory retirement. Partnership business may be continued by surviving partners if partnership firm makes provision in the partnership deed. Partners make arrangement to settle account of deceased partner with his legal representative, that is legal heir, who will be entitled at their choice to interest at 6% per annum on amount due from the date of death to the date of payment, that is settlement. This is a partner can charge, that is a legal heir can charge the interest up to 6%. Again here the next part comes, that is your ratio. Here in this case we'll have to again calculate ratio. New ratio is there because the remaining partners are going to continue the partnership firm. They decides what the amount of ratio, what is the new ratio for them. Then gain or benefit ratio that we'll have to calculate. On the death of partner, profit sharing ratio of remaining partners obviously changes, which is increases. Generally, it is given in the problem. We'll have to calculate the gain or benefit ratio, that is the extra share of deceased partner will be added in continuing partners. It is calculated as, suppose here there were three partners when they are equal partners. Therefore, when one partner dies, there remains only two partners. Therefore, automatically the share will be increased. Here we'll have to calculate the gain ratio. Gain ratio is nothing but new ratio minus old ratio. We'll have to calculate gain ratio as the new ratio minus old ratio. It is already considered in the retirement of partner in detail. If you want, you can go and please have the thorough and can comment in the comment box if you had any queries. This ratio is normally used to write off the goodwill created and raised to the extent of retiring partner share only. That we can say deceased partner share only. After ratios, there is preparation of accounts. But what about the goodwill? A goodwill treatment will be as it is, as we have seen in the case of retirement of partner. Preparation of accounts. In this case, we are going to prepare different accounts, that is death of a partner. We'll have to prepare revaluation account. It is also called as what? Profit and loss adjustment account. Then partners capital or current account, new balance sheet, and if required cash or bank account. When a partner is going to be done, this revaluation account is necessary for making the revaluation of the assets and liabilities. There are two ways, that is depreciation, assets are to be depreciated, or they are to be appreciated. Whenever there is a depreciation, means the value reduces, it goes to the debit side of the revaluation account, and if it is increases, it is appreciation, it goes to the credit side of the revaluation account, as usual as we have seen in case of admission, in case of retirement too. Then we are going to consider the capital account and current account. Whenever the fixed capital is there, we are going to open the current account, and in case of fluctuating capital, we are going to open the capital accounts. We are going to transfer the capital balances to the partner's capital account, then general reserve, then profit and loss balance, that to be transferred to the partner's capital account credit side if it is going to be appeared to the balance sheet liability side. And if the P&L balance is there to the asset side, obviously that goes to the partner's capital account debit side. It indicates the loss. Cash balance in the balance sheet, that goes to the, if you are prepared, cash at bank account. Then the adjustments, whatever the appreciation, depreciation, assets and liabilities to be written. And if suppose nothing is given regarding any asset or liability, we are going to write as it is that figures to the new balance sheet. That is the continuing partners balance sheet. Then we are going to close, first of all, at the time of the, after doing all the adjustment. The amount due to deceased partner is to be transferred to his executor, most important word, executor, oblique nominee, oblique administrator's loan account, and it is paid to them after completing all legal formalities and procedures. We'll have to close, first of all, revaluation account. Profit is to be transferred to the partner's capital account. If there is a loss, it should be transferred to the partner's capital account debit side. If it is current account, and transfer to the current account. Then close the capital balances. In that case, the first close the deceased partner's capital account. Suppose there are three partners, A, B, C. A, B, C. C dies, suppose. Then first close the C's capital account, and the balance of the C's capital account is to be transferred to the deceased partner's executor's loan account. It is to be transferred to executor's loan account. Am I right? And that to be transferred, that to be returned to the new balance sheet liability side. New balance sheet liability side, you like to transfer this new, that is the executor's loan account. Then regular, close the A's capital account, B's capital account, transfer the balances to the balance sheet liability side, and close the balance sheet. Therefore, the accounting treatment for preparing the account of deceased partner is similar to that of retirement of a partner. Only here, the profit of the deceased partner up to his death is to be calculated, to be given, and vice versa. That is most important. Suppose a partner dies on, we can say, 1st September. Our accounting starts from April, then April, May, June, July, and August. For these 5 months, we'll have to calculate the profit, which is generally based on the last 3 years, 2 years, which is always given in the problem. And according to that, the deceased partners nominees, they are eligible for that profit of the firm, and it is to be given. It is to be shown. Therefore, that only one part is there, and the balance of the capital of deceased partner is to be transferred to executor's loan account. That's it there in the case of the death of partner. Other accounting treatment, goodwill entries, everything will be there as we are doing in case of retirement of partner. It is nothing but compulsory retirement is there. In other cases, it is what? Not a willingly retirement is there, but here it is compulsory retirement, and therefore everything is there. Please go to my retirement of partner session. You will find very well, and this is a very shortly I have given this session. Important points will be given. If you are having any queries, any difficulties, please make the comment. I will give the answer for that. And if you like, please make the like, share, and subscribe for more videos. Thanking you.